Here's the chart of gold. Gold is down $26 as I'm talking to you. And this is an idea, a bit complex as you can see, that possibly stand the chance of actually being proved by Mr. Market. One thing I can tell you, at this point in time as I'm talking to you, I again do not expect a run to a new high, not even in an oblique way like that, not right away. No, I don't think it's ready. I think we are looking at an extension of this correction for at least several more weeks, if not 2 months or so. And then some sort of trigger is going to show up. Don't forget, we are really in the process of correcting something fairly big, what happened before. There is a pattern here, as you can see, that takes this as A. And what is transpiring here is a triangle that I think could take the shape of what you see here as an A, B, C, D, E. That will finish the B and then the final shakeout. Okay, one thing is clear. If we go sideways and then all of a sudden you have out of the blue crisis or whatever as far as gold is concerned, and there is a big dumping of gold, and you see a thing like that, so you can work with this pattern, and that will be a good place to look for entry. Right here, after it breaks certainly it's going to break this level. That seems to me pretty clear, unless the pattern is different. Yeah, it breaks through this level, having delivered the final bits and pieces to finish the B. You're going to see this plunge. See, that's not for selling and running away. On the contrary, that's for buying. That's for buying. Yeah, that's for buying. Gold is going to come back. Okay, so right now, it seems to me that we have still a long way to go in terms of finishing this B. That is probably a 1, 2, 3, 4, 5, which I take as an A. I think we're stuck here under 4,680. We might pop slightly above that, and that would be my B. So as you realize, I do not expect this, for example, I do not expect it to run to 4,888 and exceed this level. Not now. Not now. So this will be in line with my projection, and then drift lower to finish the C, which will finish in turn the D. And then again, drifting sideways, you get the point to finish the B, and then big slump. There's another thing that just occurred recently here. Do you see this? Shoulder, head, shoulder, neckline, broke, testing the neckline from the bottom. You can already see the projection of this could easily send it down to 44.30, 44 even. I mean 4,400 right here, or maybe slightly lower, and that will finish the ABC pattern. So it's going to keep us busy with this sideways price action for a while. Now, there could, of course, be a different pattern operating here, not necessarily my ABC. Whatever the pattern is, it is corrective. That's my firm conviction. That is corrective. And looking at what silver is doing could also help, of course. Let's have a look at silver. That is silver, spot silver 2-hour scale. And we are looking at taking the big drop here as our A, composed of an ABC. And then one option is that we are indeed in a lateral movement that is an A, B, C, D, E. But it's possible the D is not done. It's possible, in fact, that the D will not be on a scale to top above this level. In fact, it shouldn't. If it is an A, B, C, D, E like that, ideally it will not go above 96. Okay. Right now you can see the drop recently can easily be taken as a 1, 2, 1, 2, 3, 4, 3, 4, 5. So this leg is done. This appears to be one leg. Sorry, appears to be one leg. And if we go with the idea of gold, we're seeing this is an A, that's a B, will come down. If it does manage to climb above 78, that's a message. that's a message that we should really treat the A, B, C, D, E pattern that we are seeing here not as a complete D, but only part of it. So that's going to be an A, and that's going to be a B with probably more work here. And running above 78 will pave the way for it to climb slightly higher. Again, I do not expect this, but continue higher, meet resistance around here, just under 96, and then drop in the process of completing an A, B, C, D, E. That's the idea for silver. Let's have a look at